Welcome to County Portal, your simple source for local government services and public records. Let's get started.
So, you want to know which president started taxing tips? The answer isn't as simple as naming one person, but it's a fascinating journey through American tax history. The story really begins long before any president specifically targeted tips. It starts in 1913 with the ratification of the 16th Amendment under President Woodrow Wilson. This amendment gave Congress the power to levy an income tax on Americans. The law defined income very broadly as any gain from whatever source derived. Technically, this meant tips could have been considered taxable income from day one. However, for years, the government didn't really enforce it. In fact, an early Treasury Department regulation from 1918 actually classified tips as non-taxable gifts. For decades, that's how most people treated them. The major turning point, and the closest we get to a starting point, happened under President Harry S. Truman. But it wasn't the president who made the decision, it was the court system. In 1949, a landmark case called Roberts v. Commissioner went to court. A taxi driver argued that his tips were gifts from customers and therefore not taxable income. The court disagreed. It ruled that tips are not gifts, they are compensation for a service provided. This decision established the legal precedent that tips are, in fact, taxable income. So while President Truman didn't sign a specific law, the modern era of tip taxation began on his watch because of this crucial court ruling. But the story doesn't end there. Even though tips were legally income, reporting was based on the honor system, and many people didn't report their full amount. The next big step came in 1965 under President Lyndon B. Johnson. With the passage of the Social Security amendments, the government required employees to report their tip income to employers for the purpose of calculating Social Security and Medicare taxes, also known as FICA. This created a much more formal system for tracking tips. The final major crackdown came in 1982 under President Ronald Reagan with the Tax Equity and Fiscal Responsibility Act, or TEFRA. This law put more responsibility on employers, especially in large restaurants and bars. It established complex tip reporting rules and even allowed the IRS to allocate tips to employees if the total reported tips for an establishment were too low. This was designed to catch underreporting and ensure the government got its share. So, to sum it up, no single president flicked a switch to tax tips. It was a slow, evolving process. Woodrow Wilson's era laid the foundation with the income tax. The Truman administration saw the courts legally define tips as income. The Johnson administration integrated tips into Social Security. And the Reagan administration created the strict reporting system we're more familiar with today. It was a multi-decade effort by all three branches of government to turn those extra dollars on the table into taxable revenue. Thanks so much for watching. If you found this dive into tax history interesting, please give this video a thumbs up and hit that subscribe button for more content just like this. Let me know in the comments if you have any other history.